Good evening, everybody. Hi, Luke. Hope you're well in Bulgaria. Okay, we're going to get going at 8 o'clock Sydney time. We are streaming to YouTube this evening, so those on YouTube, if you are on YouTube, I'm unable to follow the chat for YouTube due to the fact that I can't see the chat when I'm doing the webinar. But if you wanted to ask questions, then just head over to our website. I've got it up on the screen at the moment. You head over to acy.com/education webinars. You could actually register for tonight's webinar and then log into the Zoom webinar that we're doing, and you can ask questions through that mechanism. Okay. All right, so just bear with me. We're going to get going on top of the hour. And hello, your name is 23303233576. Hope you're well. I know you've been attending the webinars over the last week or two. So I don't know quite what your real name is, but that's okay. You're more than welcome. Hi, Luke. Can you hear me now? I can't hear anything because I'm not talking yet. So we're going to get going in a couple of minutes. All right. So as soon as we hit the top of the hour, we'll get going. And again, for those that may be attending via YouTube, I'm unable to see the chat on the YouTube stream. So unfortunately, I won't be able to answer any questions if you are there sitting on the live YouTube stream. If you go to our website, acy.com, and register for the webinar, then you'll be able to ask me questions in the webinar itself. All right, for those just coming in, we're going to get going very shortly. I always get going at the top of the hour, so I'm just waiting for any late stragglers to arrive before we get going. And I can see the chat, so everybody's telling me that they can hear me fine. That's great. Okay, thanks for your patience, everybody. So welcome to this evening's ACY Securities webinar. My name is Duncan Cooper. Thanks very much for attending. And just before we get into the live Forex market analysis this evening, if you could read through the risk disclaimer. So in the live market analysis this evening, I'm going to be going through the market, how I'm seeing it using the tools I've been teaching in the webinar series. So you can see me using those tools live. So we'll get to those tools in a moment. And if you don't know me, I think everybody who's attending at the moment does know me, but if you're on the live stream on YouTube and you don't know me, my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor at ACY Securities. I'm a full-time Forex trader. Been trading the Forex market now for over 15 years. Had the opportunity of mentoring clients for more than 10. If you have any questions regarding the webinars, you can connect with me by sending an email to education@acy.com. And you can follow me on the website at acy.com. Go to the Market News tab, you'll see my analysis there. Also, my video analysis can be found at the YouTube channel at ACY Securities Australia. And you can connect with me on Twitter and LinkedIn with those handles if you want to. Just give you a minute. If you want to write anything down from that screen, I'll just give you a moment or two before I move the slide on. All right, so in the beginner webinar series, we've been going through these tools. I'm going to be using these today for sure. So I'll show you how I'm using them live today. And coming up tomorrow, 8 o'clock Sydney time, I'm going to take you through a trade sort of called what I call a trend line break. And I'm going to be using the tools that I've been going through in the previous webinars. So I'm going to be giving you some rules, a strategy and an approach to trade. That's 8 p.m. Sydney time, Thursday, tomorrow. And then we're going to be going through those final 3 webinars over the next couple of weeks. So tonight's a live trading webinar. So with that in mind, let me get to my charts. Now, just looking at the people on tonight, I think everybody's had the opportunity to download my charts, so I won't go through the process of doing how we do that. But if you do register for the webinar, you should get an email with a link giving you the opportunity to download a file that you can then install. All right, so I think just before we go through the charts, what I just want to make people aware of, I'm just going to pull up my browser, is I just don't trade the market willy-nilly without taking into account the news. And I like to use forexfactory.com, if I can get the right URL to come up. Almost got it. Forexfactory.com, there we go. And if you go to the main page, that gives you a really good calendar that you can see the crucial up and coming events for the week. We've already done Monday, Tuesday, so we've got Wednesday, Thursday, Friday here. And the red calendar events, the ones that can impact the market. So these are Queensland time, my time. So if you go there, it'll set it up for your time zone. So midnight tonight, we've got the US ISM Services PMI, that could affect the market. In actual fact, I just need to correct myself. That's actually 12 midnight Wednesday. It's already gone because that figure's already come in. So just scrolling down, we've had the New Zealand dollar interest rate decision today, which has been positive, but that's driving the New Zealand dollar pairs down, which can often be the case. So the next event coming up, so is with this arrow, shows you what the next event coming up is. So 10:15 p.m. tonight, we got the US ADP non-farm employment change. That can certainly make the US dollar positive or negative. And then the big one that everybody should be aware of on Friday the 8th coming up is the US job figures. So we might find that the market is relatively quiet or range bound, even though I know some of the pairs are moving down at the moment, especially Euro US dollar, but some pairs are a little bit range bound and they're just waiting for the news event job figures coming out Friday for the US. So just be aware of that. So I'm using here forexfactory.com and I'd encourage you to see what are the red calendar events coming out for the day. And for example, the New Zealand news today, if I saw that on my calendar, I wouldn't be trading the New Zealand crosses, New Zealand dollar, New Zealand yen, until that had passed. All right, let's get to the charts and see what's going on. I'll take you through the pairs I'm watching. So this is a pair that I'm definitely watching at the moment, is the dollar yen. But just before we get into that pair, I want to just, as I did last week, go through the dollar index and just give you a general picture of what the dollar index is doing and the S&P 500 is doing, so you can get a sense of what is in play in the market at the moment. So just dropping into a weekly chart. We've got a clear sustained uptrend starting to form on the weekly chart here from this double bottom down here, starting to form higher tops and bottoms. It was holding at this resistance area till last week. It's broken through. It's up to the next resistance area from this significant low here. And there's a few tops here. So it's remaining in trend. It's held at that resistance. It's had a bit of a pullback. You'll see that pullback on the daily. Pullback, and then it's coming up for a further challenge of that resistance level. So I'd encourage you to watch the dollar index every day if you're trading pairs that contain the US dollar. So a definite contentious level would be when we get back up to re-challenge 94.54 on the dollar index. So watch that. If it doesn't move through there, we're going to see pairs to the US dollar becoming more positive. Not sure that will break above there till we at least get the job figures on Friday. And the other thing that's affecting the positivity in the US dollar at the moment is the fact that the S&P 500, this is the US stock market, has been negative. And last week I was emphasizing that we had a 62% retracement here. And we're trying to move down maybe to the 127 extension. But this level of support here that got put in at 43.03, where we had this bounce up, it's been holding the market. I know you can see at the moment, the stock market's not really open in terms of buying and selling stocks. This is the futures market, or it's the CFD version of the futures market. And it's just telling us that maybe we're going to have a negative day in the stock market. But once the stock market does open, this could actually change a little bit and move back up. So what I'm seeing over the last 1, 2, 3, 4 days, we're into the 5th day, but the last 4 days, we're not closing below this low. So we need a close below that low, a good, healthy close below to see more negativity in the stock market. If we're seeing that kind of negativity, we're probably going to see more positivity on the dollar index. So you need to understand those two things that are at play at the moment as you move into trading a currency pair. All right, I just want to get into the dollar yen first up. And yes, the dollar index is going up. And yes, potentially the stock market is going down. If the stock market really gets going down, that will probably cause a risk-off environment. And even though the dollar index, even though the dollar yen has been moving up here, this is a day chart view. Let's come up to some area of resistance here, which I'll show you on the weekly in a moment. But if we have a risk-off environment, this will move down. So I've moved it to the weekly, and I've been discussing this over the last few weeks, that anything over 111 for me, I'm actually trading at the moment 111.54. But back in time here, this is the top at 111.71. This is the top at 112.21. Is up here. We revisited that back in June, and we came down. Obviously, we're revisiting this area once more. But when we get into this area, you can see countless times, you just look at these two lines. Once we get into the area, we generally move back down. Back in, move down, back in, moving down. So we obviously came back up there in June, just held, came back down. Obviously, last week we traded up, but you see that big rejection week? That's telling you that the sellers are up there wanting to sell it as it's moving in there. Now today, that's a weekly candle we're looking at. That's this week's candle. But we can already see that we've moved into that area today and we're moving back out of the area today. So if we put in a negative candle there, maybe, you could have already looked for an opportunity to sell up there. But if we put in a negative candle there today, I'll be expecting this to be trading back down. And then we'll have to see whether that's the start of a major change in trend, who knows. So let's just move it down. The 4-hour chart, we're just seeing, still an uptrend here, but we're having a negative. Last 4-hour candle was negative. And put a fib on that range where we got rejected last week. We're moving back up. We've got into the 62 to 79% retracement area. And so we've moved above that level of resistance at 111.65.5, and we traded back down. So is this the start of a reversal? On our chart, crossing down the MACD, but the trend here is still up at the moment. But if we start to see the 1-hour chart breaking below a higher bottom, then it's going to be the initial start of reversal from that area. 15-minute chart. I did notice earlier, if you wanted to be really aggressive, you could have traded a break of a trend line up here. So we were failing at a pivot up here in a known area of strong resistance. And we had a break of a trend line. And discussed with you in a webinar MACD divergence. So we had some divergence up here, close to 79% retracement, falling back below a pivot, break of a trend line. Maybe there was an opportunity if you wanted to be aggressive to get into a sell up here. But that being said, we can't take that trade right now because that's gone if we wanted to be aggressive. But I think moving forward into tomorrow, if we do move down for the rest of the day, let's say, then any revisit up to this area of resistance you should consider that as an opportunity in that area to look for an opportunity to sell. Because if we do trade down for the rest of the day and put in a negative candle, then that's telling you that up here the sellers are there and you want to look in that area for an opportunity to sell if you get another revisit. So I'm just going to be watching that area tomorrow, 111.65. What is price doing there tomorrow? What kind of candle do we get on the daily chart today? So if we get on the daily chart a negative candle, a red candle like this, it's actually going to be more like this one here, hopefully, with a wick on the top, a rejection candle like that one. If we get one of those candles in there, then any move back up to 111.65 should be looking for an opportunity to sell at that level because we're clearly rejecting at resistance. I can see that we're rejecting at the moment, but the day is not finished. We could close above that level by the end of the day. So I'm just watching that one at the moment and monitoring it. All right, with the fact that we may be getting some weakness on the dollar yen there, it's worth considering the fact we might see the same kind of scenario across the other yen pairs, and we're actually seeing that. But let's get into the Aussie yen now. Last week I drew this level in 81.31, and the fact that we broke below it, this is the day chart, and we've been holding against that level, falling down. We moved up for a while, above it for a while, moved back below. This candle here rejected it. That's why I'm still using that level. Last week we came up to it, and if you were in the webinar yesterday, when we're talking about the high-low, the projected high-low indicator, I drew that level in and said if we get up to that level of resistance, it could be a really good level to trade down from. I wasn't wrong because we are definitely trading down today on the day chart. So we're failing at a clear level of resistance up there at the moment. And, last month's lows down here, we could be trading down to that level through the course of, well, it's not last month's low. Last month's low is here. This is August low, but we could certainly be trading down to the bottom of that range from this area of resistance up here. So your 4-hour chart hasn't quite broken down yet into a downtrend, but what I am noticing at that is kind of a double top on the 4-hour chart. I'm seeing a negative divergence because price has just made just a fractional higher high. It rejected, couldn't hold above that level, and it's moving down. So over time, I'm expecting that this is going to probably move down through this low or this low, but at least change the trend on the 4-hour chart. And then I'm going to watch for a rally. could come all the way back up to this resistance area here. But hypothetically, could come up to the 62% retracement level, the 79. So on a rally, once we change the trend on a rally, I'm going to be looking for an opportunity to sell, trade down to the bottom of the range. Assuming price wants to be nice and kind and give us a rally. On our chart, it's breaking down obviously into a 1 hour downtrend here. Now, in yesterday's webinar, I went through the today's projected high and low indicator. So we have put in today's range. And what I was saying yesterday was, once you put in the range for the day, potential doesn't mean to say we can't move further down because the market can do anything it wants. But as a general rule, we've now moved down the 5-day average range, and it would, in all probability, start to come back up to the range. That being said, we can obviously see at the moment the price is moving down. But from a high probability point of view, if you're a trader and you're seeing that the fact that, go back to the 4 hour chart, this is moving down, you go, well, if I don't get in now, it could be down here by the end of today. It's very unlikely that we'll be down there by the end of the day because we've already done the move for the day. So it would be great if we just pop down a bit more and change the 4 hour trend structure. But what I would be doing on my 15-minute chart is coming up to the top with my fib, dragging it down to the low. If we keep moving down to a further low, then I'll keep dragging it down. And then I'll be looking to see, watching the 62 to 79% levels for failure. And then look for an opportunity to trade down on a trend line break. All right, may even go all the way back up to 81.30 if it really wants to. But I'd be surprised if this moves down too far for the rest of the day. It'll probably start to move back up. Now, you might not want to get to the 62 or the 79. Let's take that off. We got the central pivot here as well on the figure. Any one of those two levels could become resistance on a move back up. And then the figure or the central pivot could be a level that the market wants to respect before it wants to trade back down again. So I'm just going to keep moving my fib down as price moves down. I'm just waiting for a rally. So my ethos or theory when I'm trading is I don't want to be selling at the bottom of a move. If I'm starting to think, okay, I should be a seller, it's failed at resistance. I don't want to be selling at a bottom of a move. I want to sell a rally all the time. And sometimes that means that I don't get a rally, but I don't want to be selling at the bottom and then a rally comes and it's just going against me. I always want to be selling rallies in a downtrend. All right, getting to the Aussie dollar daily. Now, got resistance on my daily chart up here at 73.16, and there's a level of support here, across here, 72.20 area. And obviously, we're having a negative day today. Trend is actually down, so got lower top, lower bottom, lower top. Very cautious about this level of support that we're heading into at 72.20. So I'd certainly like to see that be broken before I would be a seller on a setup. Trading down the 4 hour. But what we're starting to see on the 4 hour chart is we've got a lower top to a lower bottom. So we're getting a 4 hour continuation pattern. I've covered that with you when I went through Fibonacci. So what I'm going to be doing is dragging this further down if it keeps moving down. Just put it on the lower the move at the moment, like I did on the Aussie Yen. And the one I was just going to be showing is we got a downtrend here. What we did see a bit of negative divergence up here when we put in the top, as you can see. So if you understood that on that top up here there was negative divergence, when price was coming back up here, you should be thinking that, well, we got negative divergence up here. This could be an area where price might fail because of that divergence that you saw there. And it's been starting to break down, obviously, from up here. It hasn't quite put in today's low yet. So, if you were a seller up here, Down at this 72.20 support, which is very close to today's low, would be a great area to take your profits if you're in a trade, intraday trade. It's not a great area to be a seller right now because you're getting into support, but the bias is to be a seller. So with my 15-minute chart, and I'm just going to scroll on so that whilst I'm analysing the market, it can be a learning webinar as well. That area where I was saying it was 1 hour divergence, we're failing at the figure. Okay, that was yesterday. Oh, sorry, that was the day before yesterday. Late yesterday, we came all the way back up to the figure. And very simple trend line break trigger would have got you in that trade to trade down. Or a very simple trade. Obviously, we can't go back in time and trade it right now, but hopefully if I keep showing them to you, you're going to start to see them yourself. You can trade them yourself. So 1 hour negative divergence on Monday, up at the figure. Come up for a retest of the figure yesterday, failed, trend line break. We've been moving down ever since. All right, so at the moment, I'm going to be waiting for this to come back up to the 62.79% area. Look for a failure, look for a trend line break to the downside, and then look to see if I want to trade. All right, so I'm not going to be selling down here, looking for a failure on a rally. And it could get up to there, and I don't have to wait till tomorrow. This could get back up to there as we're heading into New York. All right, price can move quite quickly back up on a rally. So I didn't say you have to wait till tomorrow. It's when price gets there. All right, quickly on the Euro Yen. For me at the moment, this pair isn't in a good position. It's kind of in the middle of this range that I've drawn in. If we move to the weekly chart a moment, there's weekly resistance top here where the market's failed here. And we've got support here. It's kind of in a weekly range, and we're just sitting in the middle of that range at the moment. Yes, the trend, I've got a lower bottom and a lower top, but there's a clear range there, and it's clearly seen on the daily chart. So with that being said, and I'm just pointing out because there's nothing to do for me right this minute, but because there's a range, getting support down here at 127.92 and starting to reverse back up, that would be an area where I would contemplate looking for an opportunity to buy. If price came back up to 130.66 or close to and failed again, you know, there's a couple of tops here. It could get up to that top there, or it could just get up to that top there. I put that top in at 134.69. Price got up to that top, or it just got into that resistance area that I've drawn in there and then failed, I'll be looking to sell. So those are my two boundaries where, because it's range bound, at the bottom of the range, I'll be looking to be a buyer, at the top of the range, looking to be a seller. At the moment, it's just in the middle of nowhere. All right, euro dollar, this is a different story. I did some analysis on this pair this week. It's on the website, and take it to the weekly chart. What I've done is I've put in some, this is actually a monthly level of support from the monthly chart, but I'm on the weekly chart. So yes, price is moving down, but you need to know that there's some support down here at 114.95 if you're in a trade already. And so I take that level off at the moment. And this is a key level here that the market seemingly at the moment wants to hold as resistance, 116.03. It's been a little bit above that this week, but now we've popped back below. Now, when I did my analysis on the website, I was actually hoping, maybe to a day chart here, this low over here, this is a monthly low, 117.04, that the market was holding at back in time here. Came all the way back up from that level. And yes, we broke through it through the course of last month. About 5 days ago, we had a clear breakdown through here. So when we were up here Monday, And then Tuesday, yesterday, we're up here above 116.03. I thought 116.03 was starting to become support for the market at the moment. Then I was getting hopeful that we would maybe have a price cycle back up to this level of resistance here at 116.64 or up to 117.04. That was my ideal level because that's monthly broken support. Now, obviously, we're moving down at the moment, but we do have the US job figures coming in on Friday, so that can certainly change things. So what I'm doing is I'm assessing where, if we get some form of a bounce up, where can I be looking to take a good trade to move down with the overall trend, the longer-term picture. So I'm still mindful that we can have a rally. So through the course of the month, I don't think we'll get there this week, but through the course of the month, if we get back up to 117.04, I'll be watching that like a hawk for an opportunity to sell. Same as 116.64, watching that level for an opportunity to sell if we get up to that level as well. So anywhere within that area, I'll be watching if we have a rally. At the moment, obviously, back to the weekly chart, this level of support that was through here, 116.03, we're trading back below it. And I suspect if we actually trade down to this low, so this top, which is going to be support, 114.95, then any rally, then we should be looking at 116.03 as an area to sell down from. So at the moment, day chart trend is quite clearly down. 4-hour chart trend here is quite clearly down. In actual fact, I'll just be drawing a fib at the moment from that lower top to that last bottom. And, price may only want to rally back up to 116.03 today or tomorrow, hold and move down. So at the moment, if we rally, I'm going to be watching 116.03 for resistance. Of course, if you break above that level, I'm watching these two high levels at 117.04, 116.64, but they're miles away at the moment. They're at the picture at the moment, unless we get a strong bounce up with some negative US news on Friday. So at the moment, let's break it down to the 15-minute chart with that 4-hour continuation pattern showing up. And obviously, yesterday through here, 116.03, that support level became resistance. We try to move above, back below, rejected it once more here. So any move back up, and if we did move back up today, see where covered this yesterday, today's projected high. If we did trade up, comes in at just 16.0, almost 16.02. So at the figure, there's your resistance level. That would be a great area to be a trader at. 79% fib just underneath, and the central pivot just at the same level. So that whole area up there, I don't know whether price can get there today on a rally, but if it could, that would be a great area to look for an opportunity to sell if it got back up there, or if it got back up there tomorrow, because it's just got that great level of 116.03 resistance that's seemingly broken now for the market. All right, so those are my levels for that pair. Pound yen. When I was doing my analysis earlier before coming onto the webinar, I was locking up here. You can see the daily candles traded into the area of resistance and marked in. So I've got resistance at 151.92.5 up to 152.29. So we traded into the area. So ahead of today coming in, you could have known that area was resistance. And you should know down here, this is support. And you could have been looking for an opportunity to sell up here to trade down to support. So your 4-hour trend, it's actually still up, higher bottom, higher top, but this is clearly negative. Your 1-hour chart is going to be showing you that there's actually a bit of, as we were getting into the resistance area to the final top there, started to show you some negative divergence. That was just shouting out to you, we're at resistance, negative divergence showing potentially traders are getting ready to trade this down. 15-minute chart. So if you're up there, there's a figure there as well into today's trading. I can also see we had 1 hour negative divergence and 15-minute negative divergence. And we had a trend line break there. We had a further trend line break here. Any one of those would have got you on board. If you wanted to wait to move back below resistance, as you're moving below on that candle there at the London Open, been moving down ever since. Like you was saying in the chat there, you say you went in above. So I'm not quite sure what you're referring to there, but if you want to, if you've got a question, just type it in. I'll try and help you. So obviously this pound yen is very weak at the moment, trading at resistance at the top. I wouldn't be selling where it is because it's almost moved down to the low of the day, but there's a definite sell. Right, so did you sell, you sold it up here, did you? Right, so you're asking me, how can you buy or sell at divergence? Well, you want to wait for a change in trend. So on the 1 hour chart, as I was saying, so up here, where we're at resistance, when we're still seeing an uptrend up here to this top, this was starting to show you negative divergence. So it's kind of telling you that maybe a change in trend is going to be coming. So, but you still need to see the change in trend to execute a trade. And you're saying that you entered above. Was that for a buy or a sell? For a sell, oh, that's good. So if I'm seeing 1 hour negative divergence here, and then I move down to the 15-minute chart, and I'm seeing 15-minute negative divergence, then I'd just be waiting then for a trend line break. So close below the trend line, that candle there by 3 to 5 pips would have been enough for me to initiate a sell, putting my stop above the high here by 1 pip plus the spread. And you'd have been risking maybe about 25 to 30 pips. But obviously at the moment, it's down the best part of 80 pips. So that would be happy days if you initiate a trade there. So I don't just click in. Well, I guess I'm lying. Sometimes I do just click in if I really like the level. But if you're a less experienced trader, I would wait for a certain trigger. So a clear trend line break. There was another clear trend line break through this area here. So there's been 2 clear trend line breaks there in an area of resistance, 1 hour negative divergence, 50-minute negative divergence. It's just a simple trend line break would have done the trick. I can see a trigger on the 1 hour chart as well that you could do if you wanted to use a swing point break. If we move it to the 1 hour chart, it's that simple break of this swing point here. So that level of 1 hour support was at 151.83.5. So if it just traded at 151.82, that would be a break of that 1 hour support, and you could just sell on that basis and put your stop above the highest point. So you wouldn't be getting quite as early from the 15-minute chart, but there would have been a 1 hour break of support there that could have been a trigger to get in as well. All right. Other ways now that I would get in from the area, I'd be dragging my fib tool down from the top. And I'll be discussing this in further webinars, but you can wait for a rally up to 62 or the 79% level, wait for a trend line break from those levels, or what I'll often do, because I can see the 79% level overlaps with the level of resistance up here, is I just wait to see if price can get to that level, and I just take a trade there, have an order sitting there to trade on the basis that I'm expecting price to rally and fail. So it depends how aggressive you want to be. I like to trade often at the level that I like on first contact. If you're less experienced or you're a bit cautious about doing that, then wait for a clear change in trend on the time frame that you're looking at, and then jump in. All right, so obviously the bias there is to trade down on the pound yen from that resistance area, looking for price for me at the moment to rally back up to the 62.79, start to see some failure, trend line break, trade back down. All right, pound dollar. I've got some levels of support and resistance drawn in. Now, I know it's negative at the moment. It's moving back below this level of old support resistance. It's moving back below this level of resistance and support. But that being said, when we get to Friday, it could be a different story. When the news comes out and the job figures, if the job figures are negative, we could well see this move up. That's why I've already pre-drawn in a level of resistance that I like, planning ahead a few days ahead, just in case we do trade up. Where would I like to trade at? Or where would I like to see price fail at if it trades up? So 137.26 up here. This is a level I've got drawn in, just if we do get up to that level. Now, clearly we've got a level of old support here, 136.09, where we've been trading above for a couple of days, and clearly we've moved back below today. So at the moment, we've got the rest of today, we've got the rest of Thursday, and then we're moving into Friday when we've got the big news coming out. So for me at the moment, because now we're failing at 136.09, any revisit to that level for me would be an opportunity to sell on a failure. This level of support or resistance, at the moment, we're breaking back below it. So it's again becoming a broken level of support once more, 135.71. To me, that's not really broken at the moment because we're only 20 pips below it, and we could bounce back above it during the course of the trading day. This could be a level of resistance to trade down from if we did see a sharper decline, and then then it comes back up for a retest. At the moment, though, I'd be watching the level of 136.09 as my level of resistance to trade down from if we have an intraday rally. So the 4-hour chart, this is turned to down. So that's what I'm saying. This is trading down. I'd be watching a retest of 36.09, 136.09. If we can fail there, then look for an opportunity to sell to trade down that way. As well, I don't know where price is going to put its brakes on before it has a rally, but I'll be drawing a fib in from the high point. Keep moving it down till we get a low coming in, and then (62% retracement level overlaps with my level of resistance at 136.09. So at the moment, any movement back up, I would be watching that area anywhere from the figure 136 up to 136.09 as a good level to look for an execution to trade down on any kind of failure. All right. All right, now we've had the New Zealand dollar. This is where things can get confusing. Let me just go back to my Forex factory. Today we've had the official cash rate for the New Zealand dollar, 11 o'clock this morning, Queensland time. And actually put interest rates up. Now, normally that would be positive for the New Zealand dollar to, say, the dollar or the yen, but the pair's going down. So what that means is that the market was clearly expecting that interest rate change upwards, and it already factored it all in because the market's been going down on those pairs. So let's get into the New Zealand yen. And this is rather range bound, a bit like the euro yen that I was showing you before. So that being said, at the moment, it's not in an area that I like because it's getting close to this daily level of support here. I'd much prefer to see what it does on support does support hold? If it holds, look for an opportunity to trade back up. So, does it come down to support? If it holds, look to trade back up to resistance. If it got up to resistance, then look to trade down from resistance. Now, that's at the moment. If it holds at support, what I can see from experience, if we draw a fib in from high to that low there, we failed at the 79% level. Let's move to a 4-hour chart. Failed at the 79% level there, so the move down, rally. Now, I'm still not convinced it's going to break this level of support because it needs to prove that it's got the trend starting to unfold now from this consolidation area. So what I'd like to see at the moment is this breaks down as a good move down, at least to 127 extension. It'd be great if it was deeper. If it got deeper, that's just showing you the veracity of the trend that's coming into play. That would be ideal. And then if that happens, that kind of move happens, then I'd be looking for price to come up to 62.79, and then I'd be more in favor of selling a rally to trade through this level of support that it's trying to negotiate. So if I'm going to trade like that, I need to see it break down first of all, then rally. If it doesn't break that level of support, my option is to trade it back up to resistance because it's just telling me it's in a range. All right. So got to be smart. You might want to be trading the idea that this is going to break support and trade all the way down. But here and here, it's getting support at around about 76.42. If it comes down here, doesn't break through, you can't be a seller anymore because it's going to bounce up. You need a clear break and then looking for opportunities to sell. You've already missed the boat on this pair at the moment to be a seller. So New Zealand dollar, day chart. All right, hopefully you can see we're on support. So having a very negative day with the news that's come out. But don't get too carried away because we're trading into a known level of support here that the markets move below, back above, just got below it, back above. Yes, this area of broken support became resistance. So at the moment, there's a level of support just here, 68.59. So we're trading into a couple of levels of support at the moment. So if you were a seller up here at resistance, great, well done. But you're on support now. This is where you take profits. Or if you think this is going to have a long-term move down, you've got your trade at break even. Fingers crossed then that the negativity that we're seeing today from the news release effect is going to continue down. So moving to a 4-hour, you get this level of resistance in at 69.81 from a day chart. This is just support and resistance working perfectly. There's a level of support, we break below, comes up to the pip, down, just fails up here, just short. Up there today, it was difficult to trade up here today because of this big rejection candle and it rejected within the first 5 minutes, so you couldn't really trade it. And then it's just been trading down ever since. Now, if you thought, well, okay, long term, this is going to trade down for through the whole month, then I would be just putting a fib from that top down to where the lowest point comes in, and then look to see where the 62.79% areas are. Watch those areas for failure. But if we, for me, let's move back to the daily. If we close above that level of support that we're testing at the moment from this low, 68.80 is the level. If we close above 68.80 today, it's probably going back up the range to resistance, because it's just in an area of support and resistance at the moment. And as I said to you before, a lot of the time, price is just bound by support and resistance, especially when we're waiting for a big news event to come out, and that's the big job figure news on Friday. So I don't know if I'd expect this to be below this level before Friday, because the market wants to know what the news is going to be on Friday for the US job figures. Is it going to be US dollar positive or US dollar negative? Now, the one pair that is, so if there's a pair that, you know, I'd have on my monitor watching at the moment, is the euro dollar. For whatever reason, it's one of the weakest ones at the moment. It's barely having any rallies. I was hoping it was going to rally back up to 1704. So we'll just finish having a final review of this euro US dollar. And the one thing I'm noticing today, and I'm noticing of yesterday was quite a quiet trading day, but started the trading day up here. For those that attend my pivot point webinar, just started the day here and then got below the central pivot point. Couldn't quite get to the central pivot point, and we closed over here. So nearly all day, we spent the day underneath the central pivot point. Just a couple of candles on here when we started the day. So if you've seen that coming into the new day, what we're seeing again is we haven't traded up to the central pivot point. That's just telling you that this pair at the moment is weak and it's in a strong downtrend. I was hoping for a deeper rally than what it gave on Monday, but clearly it doesn't want to do that. And the market doesn't do what I want to do. Sometimes it does, but it'll do what it wants to do. But it's telling you at the moment this is weak. Have to be cautious. Back to my weekly chart. There's a level of clear support here, 114.95. That's 5 pips away from underneath the figure at 115. So expect 115 to be support in that area. So I would probably anticipate that we move to the 1 hour chart here. This may well move down to the 115 area, may move back up to the 116 area, 116.03. That's that strong level of weaker support that's got broken. So we may well find, as we're heading into the new month, that the new norm for this pair becomes between 116, 115 over the next few trading days. Could move back up to 117 if the US job figures are very, very poor. But as we move back into next week and I do another live webinar, it'll be interesting to see, is 115 and 116 still the range for this pair, or has it moved up to the 117? So we can review that next week. All right, so just watch those levels I'm talking about. 115 down to support, back up to 116 resistance or 117 resistance. Got a question coming in. All right, so you're talking about the configuration empty file raw file. I'm not quite sure what your question is. You're saying, does charges imply, because when I click on it, price was shown? There's no cost involved in the raw file, the MT4 configuration file, but I can go to mine and show you. So let me just go to my desktop. So you should be able to download this webinar configuration file. It's a raw file. Now, to be able to get the files out of this file, you will need WinRAR software, but that's a free download. So you just go and Google WinRAR software. You can download that for free, and you'll be able to open the file with the free software if you need it. So you just double click on it, and it's just on the right of the screen. You should be able to see these folders. Just watch the video. And you should just move these folders to where I tell you in the video, and you should be able to do it. There's no cost. So I'm not quite sure why you're saying there's a price was shown. This should be no price whatsoever. Okay. If you want to ask me another question about it as we get to the end of the webinar, then please do. But as long as you've got if you've got WinRAR software or you've got WinZip software, you should be able to double click on the file. So I'll do it again. Double click on the file. And then all you need to do is move these folders out to the area that I tell you in the video. There shouldn't be any cost involved whatsoever. Now, the WinRAR software itself, I know that you can buy, there's a cost to buy the retail version, the proper version, but I know there's a free version that you can use, or you can use WinZip. That will enable you to extract those folders out of the file. All right, hopefully you can do that for yourself. Okay, everybody, if you've got a question, feel free to type it in. If you've got, just before we conclude, next 5 minutes, if you've got a pair that you want me to have a look at, or another instrument that you want me to have a look at, just type it in. I'm happy to pull a pair up that I'm not following. And we can have a look. I'm just clicking through to see what's going on in the pairs we've been looking at. So we met today's projected low on the Aussie Yen, as I was discussing yesterday using that tool. See how it wants to come back up. This is not an area that you want to be selling at the moment. Aussie dollar is just a bit short of its projected low. Euro dollar, I'm on the 1 hour chart here at the moment, but we're almost met today's range for the day. So it's down to about 115.40 for the day. It's not, impossible for that to move all the way back up to 116 today. Especially when just having a look at the news for the day, especially when we've got some US news coming out at 10:15 p.m. tonight. Okay. Still more than possible to come back up to this area if you're looking for an opportunity to sell. All right, so it looks like a lot of the pairs have run down at the moment and they're having a bounce. So on those pairs I've drawn the fibs on, you can monitor those fib areas that I put in. And this is the pair that I'm monitoring at the moment is a dollar yen. Is this 111.65 area. If it wants to fail at that level, back to the day chart. Like I was showing this, like this candle here, or that candle there, if we get a very negative rejection candle today, then what I will do tomorrow. So at the moment, the day is not finished. But if we get a negative candle today, I'm going to draw my negative candle in. Let's say it trades down. This is my negative candle. So price is trading down all day long. Then what I'll do tomorrow is I'll draw a fib across that range. And then I'll be monitoring the 62 to 79% retracement levels. It's always great if the 79% level overlaps with the level of resistance that you're rejecting the day before, because price will often come up very close to that level for a test before it wants to further decline. It's very rare that price will reject. So that's my candle there. And then start the new day and just put in another candle straight down. Price doesn't really work that way. It trades, in a downtrend, it'll trade down, it will rally, trade down, like I've shown on the 4 hour chart. So that's what I'm looking for tomorrow. Of course, I need to see price reject at that level at the moment, because the actual trend at the moment is actually up. Day chart there is clearly up, but on the weekly, last week it rejected that area. And just to prove the point, like I was just showing on the day chart rejection, putting the fib across it, there's a rejection candle there on the weekly chart. You can do the same thing with the weekly chart range across the candle. Just trying to find my... Yeah. All right, so this was the low of last week, just there. That's the high of last week. And you might say you're not quite using the Fibonacci tool correctly, but all I'm doing is looking at where we're failing at today relative to the range of last week's candle. Hang on, let me draw in last week's candle using the wrong tool. So there's last week's candle range. All I'm asking myself is, from the low to the high, where are we failing at right now? And as you can see, lo and behold, we're failing at the 79% level of that candle. And that's why I'm showing the exact same thing as I was showing you. If we put in a rejection candle today, I'll draw a fib from the higher the candle to the lower the candle and see if price rises back up to fail at 79% level. So it's doing it at the moment based on the weekly rejection candle, but it may well do the same thing tomorrow based on the daily rejection candle if we get a daily rejection candle forming today. All right, so hopefully that didn't confuse you, but that's often what I'll look at, is where does it rally back up within a rejection candle. And sometimes I'm looking at a weekly rejection candle. Okay, everybody, we're near the top of the hour. Thanks very much for attending this evening. Hopefully you got some good levels to watch through the course of the coming week. And as we get back into live analysis next week, we can review how these levels are working. I know last week I gave you the level on the Aussie Yen. I gave you that level last week, 81.31. And lo and behold, yesterday and today, we've been failing at that level. So hopefully jot down some of those levels. You can see how they work, and we'll revisit those next week in the live webinar. So Luke, thank you. Have a nice evening. Just before we conclude, whether you're live on YouTube or you've been attending the webinar by registration, tomorrow, 8 p.m. Sydney time, tomorrow evening, we're going to be going through, in the beginning webinar series, taking you through the trade setups, trend line break. So if you've got the time, nothing better to do, I'd love your company, so please join me. So with that in mind, thanks very much for attending this evening. Have a great evening, stay safe, and I look forward to seeing you next time.